right, welcome to Common Sense Investing. My name is Cameron. It's another live stream talking about microcap stocks. I'm a little bit burnt out, I have to say. It's been a busy month. There's been so many stocks to research. There's been so many different investor conferences. Some investor conferences are still going on right now, but I think some of the major ones are done, and that's what I'm going to talk about in today's presentation. I don't have a huge presentation today, so let me know if there's anything you want to talk about. Put it in the comments, ask questions, companies you want me to chat about or ask questions about. I'll do my best. Sometimes I know them, sometimes I don't, right? It is amazing in the microcap stock space. I do kind of laugh sometimes and compare it to living in a small town because, you know, when you come from a small town, everybody's always like, oh, you must know John from the small town, the same small town that you grew up in, right? And it's like, no, there's, you know, yes, it's a small town, but there's still 5,000 people that live there. There's probably about 30 Johns. I don't know every single John, right? So that's like microcap stocks. I know a lot of microcap stocks, but man, there's so many out there. It's impossible to know them all. Anyway, long story short, let me know questions, comments, or any stocks you want to talk about. Throw those into the comments. I will be monitoring those. And what's your favorite company? What's your favorite stock coming out of Small Cap Discovery's Investor Conference, September 29th and 30th, and then coming out of Planet Microcap, which was October 21st to the 23rd, right? Just last week. It has been busy. Gold, please tell us which miners you are watching. That will be an easy answer. So for Planet Microcap Showcase, I think this link is still working. If not, I know that Microcap Club and Ian Castle has other links. You could go to Twitter, go to X, check it out. But I mean, you could still watch a lot of the, actually I should circle this, webcast links. You can watch a lot of the presentations from Planet Microcap. They're still up, they're still available, right? And so if you missed any from the 70 companies that were presenting at Planet Microcap, you can go back. I've watched about 40 presentations at this point, basically going, you know, blind and maybe a little bit deaf just watching microcap stock presentations, but I am learning quite a bit. So hopefully people enjoyed that. If you were there in person, I know I talked to a few people who went and said it was a fantastic event. So as always, thank you to Microcap Club and Planet Microcap for putting this on and giving us investors this type of, you know, information and opportunity to connect with microcap stocks. I was not there in person at this event, but being able to watch it, you know, basically from home, at least the presentations, was great. As well as, you know, thank you to Small Cap Discoveries back in Vancouver. Same thing, right? They put on a fantastic presentation. It's just such a huge opportunity for microcap investors to go, you know, talk to some of these stocks. It's speed dating, right? It's speed dating. You get to meet 70 different companies, investor conference after investor conference after investor conference, and you learn which companies that you want to take on that second date, right? So it is pretty important. Better to have a strategy than not have a strategy, and it's okay to be wrong, right? I always say that. We're building up our investing muscles when we're building a strategy, and if we're wrong, we figure out why we're wrong. We learn from it, we grow from it, we develop another strategy, and maybe the next strategy is a little bit more correct. If we can start building strategies that are 51% correct, you will make a lot of money in microcap stocks, right? Of course, right now, any strategy we put together, you know, can change due to news. You know, Donald Trump these days does make most of the news that affects the stock market. You never know if we're going to get a broad market crash. And then, of course, anything unexpected. I mean, COVID, that was pretty unexpected, right? The Russia-Ukraine war, that was pretty unexpected. So, I mean, there are these factors that can blow away your strategy whenever you build it, but that should not excuse you from making a strategy in microcap stocks. This has been mine, right? We had this bull market run in June and July, which was a little later than normal, later than most years, you know, but I was planning after that bull market run to kind of have a lazy summer in August and September. I think we got that in microcap stocks. I have been planning for somewhat of a little minor bull market in microcap stocks in October and early November. Fingers crossed. I think I've been seeing some strength in some microcap stocks. I think we have been getting that. A big part of that, again, thank you to the investor meetings, the investor conferences, because it creates awareness. We do a little bit of speed dating with different companies. We figure out which ones we like the best, and then we buy. Right, so that does create a little bit of bullish bull run in the microcap stocks. However, we're also coming up to tax season, right, as well as the Christmas season. People have a little bit less money. So, does a bull run last forever? Could be wrong. This is just my strategy right now. I'm still expecting a bit of weakness, but I mean, over the next couple months could be a potential fantastic buying opportunity, I hope, for microcap stocks, because I am actually pretty bullish on 2026. I do think that because of some of this, because of Donald Trump and elections and tariffs and all these issues, still fighting with China and all that other stuff in the news every day, right? 2025 has been pretty challenging. It has been an off year. So I am hoping that 2026, we've already gotten over a lot of the shock of tariffs and stuff like that, right? You notice the other day when the US and China got in another trade war there. It lasted for about, 36 hours where they were fighting online. The market didn't move. The market didn't care anymore, right? So I do feel like the market and potentially the economy is kind of returning to normal and maybe a little bit numb to all these tariff issues and everything else. So I am hoping that 2026 does see a bit more return to normal. And if we can get that with a lot of these stocks, if we can get a return to normal plus a little bit of growth in 2026, I think the year-over-year numbers for a lot of companies compared to 2025 should be pretty impressive. So that's my strategy. That's a lot of drawing, right? And of course, still a little bit of wobbliness coming up, but I am hoping for some improvement coming up. I'm excited. I'm excited about microcap stocks. I still am, right? Maybe not as excited as I was in 2024 when just everything was going up, right? I do think it's a stock picker's paradise right now, but I am excited, absolutely. One of the things that also excites me and a great thing to happen from these conferences is you start to see some of the same companies show up time and time and time again. And it's amazing to me how many times I'll find a company and I wasn't interested, year one, too early for me. Year two, okay, they're kind of showing improvement, but not quite ready. All of a sudden, year three, I'm starting to take a look, maybe even build a bit of a starter position. And then by year four, really is you're quite bullish and you almost see this company as a new company, but you've had all this time to kind of research it and watch it and learn it and kind of grow with the company until you kind of finally make that decision. I love that, right? And Ian Castle is talking about here where sometimes the best new ideas are old ideas, right? Companies you used to own. Maybe you bought them somewhere along the way in year one or bought them somewhere along the way in year two and decided to sell. And maybe it was even the right decision because they had a weak quarter or a weak year. But it is interesting sometimes that these investor conferences do keep me coming back to some of the companies that I already researched or potentially even already owned. You understand the company, you know where the skeletons are buried, what changes they need to make them investable again, and you can react quicker when you see these changes. Symmetrix. Symmetrix is one of those for me. Go take a look at Symmetrix right now. I feel a lot better about Symmetrix right now than I did last year. Let's see here. What do we got? So I'll take a couple questions while I'm at it. Gold, please tell us which miners you are watching. Pretty much none of them. So I don't do junior miners, and I don't do junior oil and gas, and I don't do any pre-revenue companies pretty much. So typically my channel is investing, like keeping investing simple, especially for new investors, which means good companies with good management making revenue and high quality revenue, which usually means profitable, doing that consistently with some kind of growth to that, right? Pretty simple investing strategy. There's a lot of these kind of simple companies out there that are easy to find, and that's typically what I try to focus on. It's pretty much just the same investing strategy stolen from like a Paul Andriola and an Ian Castle, just mixed up, put together in my own words, my own opinion, and then just put to you on YouTube. But I am looking for profitable growing companies. There's not a lot of miners which I'm watching that aren't pre-revenue, right? Some ones that I do like are Orbit Garant. That was a Keystone Financial stock pick. Dynacor, which is a Keystone Financial stock pick, right? And that's about it. That's about the only gold stocks I follow are Dynacor and Orbit Garant Drilling. Rocket Doctor AI got a shout out on BNN and made some sort of agreement with United Health, but just made its first revenue and looks to have lots of paid promotion coverage on YouTube. Thoughts? Well, my thoughts right off the bat are hard no for me. So this is exactly what I don't cover. So here's the thing. When you're in microcap stocks, you really need to decide what you are. Are you investing or are you trading? If you're investing, that means you're doing the work to find a good, growing, profitable company that's going to continue that growth for many, many years. You're buying shares today to hopefully hold for 2 years or 3 years or 5 years or 10 years, and eventually that company is going to 10x or 100x into the future. That's kind of the goal when you're an investor in the microcap space. Now, doesn't always happen. Right, I know that the average hold for most microcap stocks is around 18 months. So you don't always get those 10-year winners, but the plan is to get 10-year winners. You're looking to buy and hold, and sometimes those companies disappoint and you end up selling a little earlier than you wanted. The other way to make money in microcap stocks, obviously, is a bit more trading. And I don't mean day trading. I mean more of like a can slim trade, where you know a company is going to go up, you know a stock's going to go up. Not necessarily the company, but the stock's going to go up because it's very popular. Everybody's talking about it. It's highly promoted. They're spending a bunch of money on it. You go look at the technicals, and the technicals are just through the roof. And you know that I could buy this stock today on Monday and sell it for Friday and make money. That's a trade. And I don't mind people going out there and making money on trades, right? I am a channel that supports retail investors. So the best investment you can make is any investment that's going to make you money. What I suggest is don't confuse the two, right? If it's a pre-revenue company that's promoted and getting talked about on BNN and you think you can make money in a trade, go for it. I don't hate trading. I don't hate traders, right? Absolutely go for it. Just do not be sucked into what I've seen before where people think it's a great company and you're buying it for 10 years and everybody else is selling it. And you're actually turning into exit liquidity for those investors, those traders, right? I love their product, but it looks pretty risky with what they're currently at. You can't love a product until it gets product market fit. So there's millions of products that people have loved over the years that it never sells. It never works, right? You can have fantastic ideas that never get built. You can have fantastic companies that just go nowhere. Like the only way to make money in the stock market is through quantitative numbers, right? Revenue and earnings. So the best products are the ones that make profits. And I have made money in stocks, microcap stocks, companies where I really struggled to understand what their product was, or I didn't like their product at all. But if the revenue is going up and it's profitable, the stock is going up, that's all I need to know, right? The hard part is when you are loving a product but nobody else does and nobody's buying it, then you're not going to make money, right? That's just the way it goes. Now, for more research on some of the stocks that I cover, I always have to pitch myself. My wife absolutely insists on it now every live stream. Go to www.commonsenseinvesting.ca. I have a Substack. I have a Patreon. They basically both do the same things where it leads to a Discord where we sit around, we chat about stocks all the time, right? So all the stocks that I talk about here today, as well as a lot of stocks that I don't talk about on YouTube or I'm just researching. That all gets done on my Discord and either in my Substack or my Patreon. It's basically the exact same product and service, just in 2 different locations, depending on your preference. So that's where you could find me. I'm going to talk about a few companies specifically in this presentation. Keep in mind, it's not financial advice. It's not solicitation to buy, sell, or hold any of these companies. It really isn't. I don't know anything about you, your experience level, your risk tolerance, or anything else, right? So it's just me communicating me and my opinions, and I could be wrong. So please go out and do your own due diligence. I'm also on live stream. I can get stuff wrong, right? I'm going off memory. I'm not sitting here and scrolling through earnings, looking at exact numbers. So not financial advice. This is always a fun one for me. I like coming back to this slide every once in a while, just as a reminder, because we are headed into a volatile period for microcap stocks. I do think we are going to have a very, very good 2026. But one of the things we always see every year is that mid-November to mid-December really opens up some potential buying opportunities for some microcap stocks due to tax season. Some of the capital gainers, some of the companies that have gone up a lot will take a little bit of a dip because people are selling for capital gains. Other ones that have gone down a lot will take another nosedive because people are selling for capital losses. So you kind of get these 2 opportunities for buying, and it's something to consider. I always say, if I was ever given one time of the year to rebalance my portfolio, sell some stocks, buy some other stocks, and really start from scratch, almost every year, it seems like that would happen for me around mid-November to mid-December. So that opportunity is coming up. Do not forget that, right? If you would not buy the exact same portfolio Monday morning, then the question becomes, why aren't we building the best portfolio every day, right? So if you don't currently have the best portfolio for you, why do you still have it? Why aren't you trimming or selling some of the companies you don't want to own anymore and go buy some ones that you do, right? So that time for me is coming up mid-November to mid-December. What else we got here? Cannabis. So this was a big theme. I was telling everybody in my Substack article even, right? Cannabis. If there was going to be one success story from Planet Microcap Showcase, I was hoping that it would be that cannabis stocks would get discovered because so many were presenting at Planet Microcap Toronto. And while this kind of happened, I was very happy that on day 1 there was 2 presentations for cannabis stocks. ATB pitched Decibel Cannabis, and Maxwell House pitched Oxley Cannabis. That was absolutely fantastic. It definitely did not lead to share price of cannabis stocks taking off, right? So still taking another look at what can be holding people back from buying cannabis stocks. One of the things here that Maxwell House is saying about Germany, right? There was talks about, well, some people would not buy cannabis stocks because obviously these are Canadian companies, and a lot of them, for them to grow, that you need to look at some of their international opportunities, right? And there was some talks about a possible oversupply of cannabis in Germany. Well, this just proves the exact opposite, which is Germany increases the medical cannabis import limit by 70 tons. So obviously there is demand for international cannabis, which our favorite, friendly, hopefully profitable and growing Canadian cannabis stocks can provide. Maxwell House here is saying, maybe I'm not bullish enough on cannabis. This was Decibel Cannabis today. It was going as low and selling down to 12 cents recently. It was at 15 cents not long ago. So, you know, my plan kind of backfired. I was hoping that Planet Microcap would get it back up to 15 cents and maybe even 16 cents, set a new record for Decibel. And instead, we've got some of these cannabis companies bouncing off some of these lows again here, with Decibel sitting at 12 cents. I don't agree with it. It's just what's happening, right? Pretty bullish, though, for me. Hugo Alves from Oxley. This is another one. We're solidifying our financial position. We are delighted to be saving $900,000 in annualized interest expenses. So another reason why people at Planet Microcap Toronto Oh, I don't want to buy cannabis stocks. Too much debt, too much debt, too much debt. So this is another time where we've got another cannabis stock right now in Auxly repaying $5 million in inventory loans from cash. So they're producing cash, enough cash to be able to do this. So improved balance sheet, putting some more $900,000 more annually to their net income, hopefully. This is pretty good for cannabis again here. So there's some proof there that there is room for international growth. There's some proof that cannabis companies' balance sheets are going to be improving in the future. And then we've got more market penetration, right? So Maxwell House here again is looking at Auxly, how they took back 40 from basically nothing to their #1 selling SKU within a year in its category. And now Auxly is again releasing a new product, which is now going to be distributed across 100 plus stores from 20 stores in just April of 2025. Share price is done. It's gone down, right? So over and over and over again, we see this a little bit with cannabis, simply solventless concentrates. I know I'm not supposed to talk about it. Nobody likes this company anymore. Went from 50 cents here down to 16, 17 cents. It doubled for people. It went back up to about 37, 38 cents Canadian there for a while, and now it's back down. All simply solventless needs are what they must do. I shouldn't say all they need. It's a big ask, but they need earnings. They need good earnings. Now this, saying that Q3 is incoming, this is not specifically for simply solventless concentrates. I can barely take a week off because this isn't just this company. Q3 is incoming for all of our microcap stocks, right? So all of these companies that just presented at Planet Microcap, we've now got to wait maybe 1 to 2 to 3 weeks before most of these companies will be presenting their next earnings. We get to see some more numbers. This isn't just cannabis. This is across the board. We are coming into Q3 earnings season for microcap stocks. That's why I don't have tons to talk about today, right? Give me 2 weeks and all of a sudden we'll have tons of earnings to talk about. But right now I'm just, giving a broad overview of what happened at Planet Microcap. And Q3 is coming up soon. Share dilution. We need to talk about that a little bit, right? Common theme that's coming up recently. There's been a lot of companies that are doing some form of financing. I should probably do like a video on my Discord for this, talking about the different types of financings and which ones can be bullish and which ones are bad, right? This is one fantastic example for me of bad. This is diluted shares outstanding of Artificial Intelligence Technology Solutions, AITX, where they went here in 1.5 million shares in 2020. And this is now 18 billion shares. I'll be like Trump here. That's B. That's billion with a B. Right? When he said that during the press conference. I think they're up to 20 billion shares now. I think it's above 18 billion, up to 20 billion shares. Absolutely shocking. What does share dilution do to share price? Well, we could see here, right? This absolute crash down 99.999999% or whatever from their all-time highs. I wish I had the 1-year chart here. Even the 1-year chart is down something like 70% because of this even recent share dilution. So share dilution can be bad. Absolutely, right? I'm not saying it's not, but you have some questions to ask about it, right? One of the things that I don't like about financings, it really brings out the people who are already bearish in a company. They basically get to say, I told you so, right? This is a garbage company. They just need more money, more dilution. It's bad, 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 bad. Here's the thing. It's not always bad, right? You can't expect some of these companies to go public, to pay extra money to be a publicly traded company and just never use their shares. Now, it's bad for a company like what I just showed you, which was AITX, for share dilution because they're cash burning for a long time. They're never making money, and they just keep burning shares to pay the bills, to keep the lights on, to keep the heat on, to keep the air conditioning on. They shouldn't have the air conditioning on. Too much share dilution, right? But what it really comes down to is when these financings occur, right, is it the proper use of capital? Shares are capital. For a publicly traded company, shares are really not much different than cash. They are a form of capital. Is it a proper use of the capital? Are they being held accountable for using that capital? What are they using the financing on? Can you measure it, right? There's some important questions here in this one question, but basically, do you agree with it? Do you support the financing? Is it going to be a proper use of capital? And then will it produce high quality revenue? And of course, I say high quality revenue because, you know, you don't want just top line revenue and then in another year they have another financing, in another year they have another financing, right? Eventually they have to have a vision, again, coming down to proper use of capital, where eventually, maybe not this financing, but they do need to become profitable at some point, right? So you really have to question that. We've had a few of these. This one is a bit old, right? This is back to NTG Clarity Networks, brokered life offering. I think this was for what, $9 million? Yeah, right here, $9 million, 4 million units back in July. That was right here. Share price still hasn't recovered. We're now approaching Halloween, and share price was nearly $3. It was at $2.30 at the financing. The financing was at $2.20, and now we're down to $1.70. So companies have to be aware of this. This is what a financing can do to your share price. If investors don't think you're going to be able to produce high quality revenue from this, and or if it's just, you know, every year you do these financings, eventually it's more and more and more negative from shareholders and investors. So every time it seems like NTG does one of these financings, it hurts their share price for even longer. Can they rebound? That's the question, right? Sometimes you got to look at the past. Don't forgive or forget, but you have to look at it and say, can they rebound from this price? We've had more, all right? This is a fun little stock I introduced here at around 6 cents. It bounced up to about 15 cents here at the high. This is Hypercharged Networks. Then they announce a brokered life offering of $4 million, right? 20 million units here, as well as a bunch of warrants and everything else at 12 cents. It's not even closed yet. So it's going to close here in about 4 days, approximately on October 31st. Again, share price has actually been holding through this financing, so we'll see what happens when it closes. But yeah, I mean, you could tell that this company was kind of off like a rocket here for a while, and until you do a financing, and then you find your share price just kind of stalls. But that's another one. And we've had a few of these, right? Life offering here for Sabio Holdings. I think somebody just talked about that one, some kind of financing also, but I'm optimistic. Election coming up in 2026. Yeah, I'm actually pretty bullish on Sabio. I think everybody knows that. I just released, they were one of my Planet Microcap picks. I'll talk about them in a while. But they just, again, released a life offering for up to $4 million. So keep in mind, it's funny sometimes because Sabio was doing this. They were doing shares for debt, and they were doing non-convertible debentures, non-convertible, so no share dilution. So they were trying everything they could to not do financing, and it crashed their share price. When they actually did the non-convertible debenture, they were up here around 55 to 60 cents Canadian, and people were so upset that they had a non-convertible debenture that the share price dropped to 37 cents. That was their 52-week low right here back in September. Now they were just going up again. They decided, well, people didn't like the convertible debentures. People didn't like this shares for debt. We're just going to do a financing. And of course, nobody likes the financing. Sometimes you just can't win. Make sure you understand the different types of ways to raise money. Each one has different requirements, different technical requirements, right? And it can cause share price to do different things and do different things for investor sentiment. So I'll talk more about Sabio Holdings in a while, but yeah, I mean, another financing. And here's one that just went well, right? Remember, Gatekeeper did a $10 million bought deal private placement. Nobody cared about that one because institutions were getting in. That was July 14th, and look at their share price ever since, right? absolutely crushing it, absolutely crushing it. So people will ask, what's the difference? I don't have time to talk about it all today, but just make sure you go do your research. They're all different, but I think with everyone, you kind of have to ask yourself, proper use of capital, will it produce high quality revenue? If the answer is yes and yes, then it's probably a good financing. And that's like most things in investing. Sometimes there's really never no black or white. Something in investing, these decisions that these companies are making, are almost never just like, well, that's bad, that's obviously bad, and this is good, and this is obviously good. Most, not all, but most things are kind of somewhere in the gray. And that is these types of financing. They all create different types of risk. Let's see what people have to say here. I got a bit more presentation, but I might as well answer a few more questions. I've made a lot of money with Gatekeeper Systems, all thanks to your coverage. I've trimmed a bit, but still holding most. You called it on the upside, so your opinion now would be appreciated. I don't give buy, sell, or hold recommendations. Remember, that was not me. You do not have me to thank. I think you can go back to my interviews, and if you look at my interviews, it was their CEO of Gatekeeper Systems, Mr. Doug Diamond. Remember what he said at the end of every interview I gave? I would be like, Doug, do you have any closing remarks for the market? And he would say, guys, just go out, buy some shares of Gatekeeper Systems, and just hold on. Just keep them forever, because he's like, we're going up. And I'm paraphrasing, but it was something along those lines. His closing pitch on every interview I ever did with Doug Diamond was, go buy our shares because we're undervalued and we're going to go up in price. And Doug was correct. So I would suggest, if you want to know what to do with your shares right now, go do more research. Go talk to Doug. Go call Doug. He'll probably answer your phone calls. He's actually probably having a few more CEO interviews, not with this guy, because he's too large of a company now, right? I typically deal with the smaller companies, but go talk to people around Gatekeeper Systems and see what you think, because it was, I'm not going to take credit for Gatekeeper Systems. That was Doug that would come on here and say, just buy our shares, right? As far as Savio Holdings, optimistic because of the election coming up in 2026, yes. So keep in mind, ad tech. People have been worried about ad tech stocks for a while. Declining economy, recession. The first thing that starts getting cut is ad tech. Like, people stop advertising budgets when nobody's buying. So ad tech has been kind of with this fog of gloom above them for probably the past 6 months, especially with the trade war. The second that whole trade war thing started, ad tech stocks have struggled. If, and a big if, but if the USA and China can get a trade deal, if that can include bringing back some kind of de minimis exemption for Temu and Shine and all these little $800 suppliers, not saying it will, but if they can get there, then that would be big for some of these ad tech companies, as well as 2026 is a pretty big year. Like, there's not just the midterm elections in 2026, there's the LA Olympics, right? And the FIFA World Cup. So there's two major events in 2026 that people will want to advertise, as well as the U.S. government midterm elections. So there's pretty much three huge things coming up, at least in North America, in 2026. Do you have any news on hash stock? No, I have absolutely no news, and that's kind of the point of probably why it's been going down recently, at least in my opinion, is because all the other cannabis stocks are out there talking with investors. Oxley, Decibel, right? They're all Rubicon, Canara Biotech. They're all out there talking with investors. And while their share price isn't really going up yet, it's also not going down. And I think there's been a lot of the investors that are willing to invest in the cannabis sector, and it's not 100% yet, right? There's still a lot of investors that won't invest in cannabis yet. And that's kind of the bull case of cannabis, is convincing those people that this is a better space today than it was 5 years ago. But I think a lot of the cannabis money is going to the Oxleys, going to the Canaras, going to the Decibels, and they're not going to the hash. And so because of that, share price of hash has been dropping. They really need to have a good earnings, or they are going to struggle. Any thoughts on Renoworks? Oh, I'll answer that next, but let me do a little bit more presentation before I talk about a Renoworks software. So Planet Microcap. This was, I don't know, so far it's been maybe one of the most productive free articles I've put out on Substack. Planet Microcap Toronto, my favorite stocks. I put this out pretty late, October 18th, when the event started on the 21st. And that's why I didn't put it behind a paywall, because it was just so close to the event. But I put a lot of thought into this one. We were talking about these different stocks on my Discord. Of course, my first one was Decibel Cannabis. They're not up since Planet Microcap Toronto. They're not really down, although they were at 12 cents today. They had some good news with the German 70 tons expansion, more demand from international markets, which is fantastic. I'm surprised the share price is down since Planet Microcap. They were pitched at Planet Microcap. They gave a great presentation at Planet Microcap. So I think one of the things with some of my articles, though, keep in mind when a company benches up like this, right? When it goes from 7 cents to 14 cents, you're basically up 100% very, very quickly in a matter of a couple months. It does take some time to consolidate. So patience. I think with most of my articles, you really have to look at them, or at least I do, on what could happen in the next 12 months, not necessarily the next 12 days, not necessarily the next 12 weeks, but the next 12 months. And that's same with most of the cannabis sector. So this was the second company that I pitched for Planet Microcap, and it wasn't a single company. It was basically all the other cannabis stocks. When I looked at the roster attending Planet Microcap Toronto, it was quite obvious to me there was cannabis stocks which were growing and profitable, and yes, they had a shit pile of debt to pay down, but they were growing and profitable and undervalued, arguably, and they just looked different than every other company that was attending. So the cannabis stocks really stuck out for me at Planet Microcap as being good opportunities. I highlighted Oxley Cannabis here. They had good news again today, but share price isn't necessarily up. I thought the cannabis stocks did very well. We just need to see what happens over the next 12 months. We need to convince more investors. We need to convince 100% of investors that the cannabis space is safe again. It's a good place to be. We're definitely not there yet. I don't know what percentage we're at, maybe 20%, 25%. We're definitely not 100%. Savio Holdings, this was a stock that I covered on Substack at 37 cents. It went up to 47.5 cents before Planet Microcap. Thanks to their 43-cent financing, it is down to 41 cents Canadian, so it is down 13%. I still think it's massively mispriced, but they absolutely need execution in 2026. They need a big year in 2026, and they need to produce cash in 2026. This is one of those companies that desperately needs cash. You could see how these debentures and these financings really hurt their share price, and so they need to quit that if they can. But that was down 13%. Ferrand Technology, I really like this. This one surprised me because this is a larger market cap than I normally like on this channel. Normally I like $25.7 million kind of market cap company, not $257 million market cap company. But the point was with Planet Microcap Toronto was there was a lot of institutional investors there. Big money looking for bigger stocks. They can't invest in a little 4-cent penny stock, right? Institutions need larger companies to invest in. Ferrand Technology was $10.22 going into Planet Microcap. It's now at just over $11, had a decent, couple days there, up 8.5% since Planet Microcap. Blue Metric Environmental, really one of my favorites just because it's a water cleaning stock. Really love that. I've been looking for a water cleaning stock for a while. This is a bit of a hybrid, but they do clean water. I just look, again, sometimes one of my favorite ways to invest is to find an industry sector that I like, that I'm bullish on, that I know is going to run for the next 20 years, and then find the best company within that industry sector. That for me might be Blue Metric. They're up pretty significantly here. When I highlighted them on my article, these are snapshots. These are screenshots taken from my article. They were at $1.22 Canadian. They're now up to $1.49 Canadian. They had a very nice day today. That worked out well for this live stream. They're up 22% since I introduced them on that free article. And then finally, Reclaim Holdings. This was a $10 million market cap company. The little company that could, I introduced them on my article here at 8 cents. They closed today, had a strong day as well. Look, up 15%. So I timed this live stream perfectly, right? I deserve it because a lot of the times I'll have a live stream on a Monday, and Mondays can be bad days, and it's the exact opposite, and all my favorite stocks will be down 15%. So it is nice to get lucky every once in a while, and Reclaim has gone from 8 cents to 11 cents. So go read that article, find out why I'm actually bullish on this little company. I think they could grow for a lot of years. We need to see some execution. And I mean, this was up, 8 cents to 11 cents. What is that? What percentage is that? That's pretty good, right? And then Zoomed. I introduced Zoomed finally. Again, this was because a lot of institutions were attending Planet Microcap Toronto. This is a stock, $205 million market cap that institutions can buy. $2.05 in my Substack article, $2.46 today. Down 6%. They were actually all the way up to $2.66 Canadian. They've actually dropped about 20 cents. But even at 246, they're up 20% in my article. Since my article, that was on the 18th. That was 9 days ago. So pretty good. I'll take it. After 9 days, up 20%, up whatever this is, 25, 30%, right? Up 22%. Up 8%, one stock in my article down 13%. Oxley, I think, is up half a penny, negligible, and Decibel is 12 to 13 cents, pretty much negligible. I'll take it. I think it's good performance. But again, not 9 days. I'm looking for 90 days, 900 days. Where are these companies going to go, right? So Ian Castle here says, this won't be generally accepted in most value investing circles, but I believe if you're not taking some small losses from time to time, it means you aren't taking enough risk. Show me a guy who's afraid to look bad, and I'll show you a guy who can beat a guy who you could beat every time. So this whole show me a guy who's afraid to look bad, at least that isn't me. I do everything publicly on either YouTube or Substack. So for all my faults, and I do have a lot of faults, at least I'm not afraid to look bad. And I will take some losses. That's one of the most frustrating things to me is that, so many investors, especially just assholes who are looking to make fun of you, will find the one or two stocks that didn't hit, that weren't winners, that something changed, and they're down. And it's just the dumbest thing I've ever seen, because I agree with Ian Castle here, right? I'm never going to get 100% winners ever, because I take too many risks. You look at some of these companies, right? Reclaim, that's at a $10 million market cap, very tiny company, tons of risk when they're that small. Sabio Holdings, $23 million market cap company, about $6-7 million of debt, high risk, right? That is the space that we're in. So please don't forget these companies, all of these companies, even the larger ones at the $200 million market cap, that's still tiny for a company, right? Zoomed, FTG, those are large for microcaps, but they're still small companies and they have some risk. But at the end of the day, I agree with Ian here is that you absolutely need to take some risks if you are eventually going to outperform and do well. And again, for me, it comes down to this. So I have this. It's a slide stolen from Ryan Telford, which says that, yes, I put a lot of emphasis on companies that produce sales growth, top line growth, revenue, but eventually, doesn't have to be all the time, right now, today, yesterday, but eventually part of my investing thesis needs to be that those companies are going to improve their profit margin. And if they can do that, Sabio, right, NTG, pretty weak revenue companies. If those two companies, NTG and Sabio, can find a way to improve their profit margin, that's when you get investors that are willing to pay more money for those shares of those companies, and multiple expansion happens. This is what happened with Zoomed, right? If you go look at Zoom, Zoom had fantastic revenue growth, yes, but Zoom then, once they got fantastic revenue growth, really started to see some margin expansion. And then even today, you're still seeing that multiple expansion now from Zoomed as people discover this stock. But it really comes down to me for time target. That's why I put this on so many of my slides. When you're buying a stock, and I talked at the start of this video, are you trading or are you investing? Like if you're investing, you're probably looking at some form of either I'm going to buy and hold year over year, and I'm just going to look at the audited annual financials, or I'm investing from quarter to quarter. I'm going to rebalance every 3 months on earnings. Some people are just going week to week or even day to day, right? But you really have to understand, which one of these investors you are. And that's it. I'm done. But pretty good article from Planet Microcap, and I'm pretty happy with Planet Microcap. So let me know anything else you want to talk about. I'll head on over to RenoWorks software, right? So let's see here. What do we got? I don't know that I have any thoughts on RenoWorks. So this is a company that I covered years ago, and I can't even bring this up in 2024. I think I covered them in 2023 or early 2024. It was way back here. And it's one of those things where, a question again of how long are you going to hold a stock? It's amazing sometimes at the longest I'll hold a stock is 12 months. Past 12 months, unless something's happening, unless I'm really, really close to, by month 13, something is going to change, I typically bail. That's just the type of investor I am. I know the type of person I am. I don't have the patience to hold a stock longer than 12 months. So unfortunately for me, I missed out on RenoWorks software despite putting in all this research back here. And I actually made a video on RenoWorks software. I like the company, I like the product, I like the service. It's gone up significantly in price. It's come down here. Potentially, is that a buying opportunity? Go do your research. This company has a lot of potential recurring revenue, and it's well supported by small cap discoveries. I know small cap discoveries will have more CEO interviews coming out of RenoWorks. It's just getting discovered by by retail investors. So you're going to get that next level of discovery from other retail investors if RenoWorks executes and produces more good earnings. So I think what's happening is that people are waiting for the next earnings to make sure that this thesis is kind of validated again. That's why share price is going down. And this is like so many of these companies. I had that slide that said, right now I think we're entering a period of a lot of volatility. And I think a lot of investors right now are waiting for Q3 and will make their decision on what to do with a stock, what to do with their cash based on the Q3 earnings of these companies. And I have the same opinion right now of RenoWorks. I like the company, I like the service, has a lot of potential. I need to see their next earnings because they're already up basically 100% here, right? 134% in the past year. So congratulations. But for me, some of these companies, I need to see a little bit more execution before I'll say that it's going to be a larger stock or it's going to keep going up. Let's see what happens next. Thoughts on NowV at these valuations? Yeah, that was a company I really liked at 8 cents. I don't know that I liked it at 55, 60 cents or wherever it got to. So remember I showed you that slide with Ian Castle that said, let's see if I'll just go find it here so I'm not bastardizing what Ian said here too much. Basically, was it right at the start? Oftentimes the best new ideas are old ideas you used to own. You already know where the skeletons are buried and what needs to change to make it investable again. And you can react quicker than others when you see those changes. So this is a great application for, in my opinion, for Now Vertical Group, right? So down here when it was 8, 9, 10 cents, I absolutely love the risk reward of this company simply because the CEO was executing and the market hadn't taken notice yet. So this was a very high risk company down here, but the CEO was doing great things. It absolutely stunned the market, went up from 8 cents to, what is it here, 70 cents, went up to 70 cents. What happens in this case is that it's still a high risk company. Nothing had really changed. The risk hadn't really gone down during this time period, other than it was discovered that the CEO was doing some really wonderful things, right? But the risk was still there. So this is how you, using Ian Castle's analysis, where basically you understand the company and understand the different cycles. This company was undervalued here, at least in my opinion, right? It was undervalued here and it was overvalued here. People forgot about the risk. It shot up in valuation because of one or two great things that were happening, and people forgot about the risk. And ever since then, it's been struggling. It's been struggling. As far as what do I think of here, again, it's no different from what's going to happen on the next earnings. What has happened every earnings this year in 2025, right? Every earnings, I'd say 90% of the earnings this year have underperformed expectations. Probably 5% have met expectations, and maybe 5% have exceeded expectation. 2025 has been a tough year. It really has. So I'm not necessarily going to go into Q3 for any company right now and say, yeah, it's a screaming good company, because what's happened with Q1, share price went down. What happened with Q2, share price went down like a rock. So for me to sit here and say that Q3 is going to be that different, Q3 is going to be the outlier, and all of a sudden share price is going to go up to the moon, like my opinion or my thought is for most of these companies right now, I'm waiting to see what earnings are going to look like, and then I will make my decision then. And you know what happens a lot of the time? Like, as long as you're paying attention, like Ian Castle said, as long as you're paying attention, and on these spikes, sometimes you could buy here, you could buy here, you could buy here. Maybe you're not timing the bottom, but there's still ways to make money. When a company improves, you get these pullbacks. Maybe you could buy here, company improves, right? You have different opportunities to buy. It's a lot easier to invest that way than trying to time the bottom. Because right now, for me, at least in my opinion, I don't know that there's any company right now today that I'm going to buy ahead of earnings and expect earnings to exceed my expectations, because so few companies have this year, right? It just hasn't happened. So that's kind of where I am at, not just with Now Vertical Group, but just with every company out there, right? Sitting on the sidelines until December when investors are selling winners, losers for the year, capital gains. Have you ever put together an analysis of late December stock purchases? So yes, yes, and yes. So good work. That's basically the plan that I showed exactly, right? When I go back up here is that's where I'm at. This is, in my opinion, like I said, this is typically when I rebalance my portfolio. I sell some stocks, I buy some stocks, really in that mid-November to mid-December. So here's the thing. Have I ever put together an analysis of late December stock purchases? Every year. Now, if you'll notice, I make videos, the best 5 stocks for the next year. I do that year after year after year, although my channel got canceled in 2024, so some of it is gone. But I actually make those picks. You'll see again this year, I make those picks in about the middle of December. I refuse to make them earlier because I think they'll be overvalued, and I refuse to make them later because I think they'll be overvalued. I always try to make my picks for the year somewhere in early to mid-December, and that's when I make those videos. So when I do my analysis of all my stocks every year, I actually don't compare January 1st to January 1st. I compare usually about December 15th to December 15th. And I make that change specifically for this reason. I think it's this is when I make most of my decisions. So this is when I actually should be comparing my performance to. Not to this, but actually to this. And it's interesting because even this year, I don't know if I could find a stock, but even this year in 2025, if you go back, everything was low here and it shot up here right until when? About February. And then the tariffs kicked in for Trump in 2025. And by about April, we were at the bottom. So comparing prices from here in mid-December to here, like late January, was just like apples and oranges. So I almost always try to compare mid-December to mid-December. And the analysis is huge. Like typically from mid-December to mid-January, I'll already be up 15%, and then I'll lose some of that somewhere later in the summer, right? So absolutely, it's a big time for me. Hash cell only concentrate, quite good also, really hard to manufacture versus growing flour. That's my only moat to hold for them for now. Fantastic, yeah. Have you? Can you talk about Glow or ADF Group if you haven't already? Yeah, I mean, I don't know what... I will rant if I talk about some of these stocks, so, but I guess that's maybe the fun part of it sometimes, right? ADF Group is... This one's a basketball, pinball, I don't know what you call it for the macroeconomics, right? I don't know how Canada could possibly mess up this stock any worse than it has. It was $20.50. This is a steel fabricator in Quebec, Canada. Not the best company at times. You know, the insiders sold some shares here. They had another large investor that was selling some shares here. Those guys sold the shares all the way down to here, just when the market had hope that they were going to recover again, back up to $10. Now they're back down to $7. Why not with ADF Group? What's the bull case here right now? The bull case has to be that Canada and the United States become friends again. That's it, right? This is one of those companies that steel goes from the US to Canada, to the US to Canada, the US to Canada, maybe sometimes coming in from China if they need it. Like, this is one of those companies that is so massively, massively, massively affected by tariffs. And then when they find a way to get around the tariffs, like for example, if the steel coming from the USA, if ADF Group is just going to perform a service on it, not be charged any tariffs, and then send it back to the USA, that's great, but not when all these contracts are put on hold, because thanks to the new USA First type of movement, the US companies are encouraged to buy steel from in the USA. So, and Canada is encouraged to buy steel from inside of Canada. But I mean, their market is 10 to 20 times the size of our market. So is the Canadian market enough to stabilize the revenue of ADF Group? Maybe. So now, despite everybody being mad at management of ADF Group up here for selling shares, everybody down here is very happy with ADF Group's management. They just performed an acquisition. It really increased their backlog. They're winning some Canadian contracts. So ADF Group is actually... They hit rock bottom and decided to run their company, at least in my opinion, right? I was pretty pissed off at them, but they did. They hit rock bottom. They've been growing on me. They've been making good decisions. Those good decisions resulted in 100% share price gain. They went from $5 to $10 right here. You wouldn't be able to know it because they're down from 20, but that was 100% share price gain right here. And now they're down again because despite the company finally making some good decisions, the macroeconomics are just so terrible. So, I mean, I think people are too fatigued. We're fatigued. I mean, if you're a shareholder and you've held through this, right, you got to be convinced to hold. I don't know what their 1 year is. Are they going to see some tax? Yeah, so they might see some tax loss selling if you bought here and you're down 24%, or if you bought anywhere up here and you're down 50%, they might see some tax loss selling as well. So again, you really have to convince me that they're at bottom. You really have to convince me that now is different and they're going to perform better, right? And the way the macroeconomics have been going, I'm not sure that's possible with ADF Group. I really like the company. I think they've been making good decisions. It's just, it's a struggle. I mean, Glow Life Tech, this is a tiny little company. It's only a $9.3 million market cap. They had 20 million warrants that were expiring in October, and instead of those warrants expiring, I think most of them, half of them, were bought out at 5 cents. So the share price is at 5 cents, but the large investor decided to actually execute the warrants. That brings Glow Life Tech a little bit of cash because they were just about out. And it's kind of bullish. I mean, again, with some of these financings and the warrants that come from financings, there's no real black or white to me. Everything's gray. So, you know, you look down here, that the fact that these warrants got exercised, that was the early warning report. And as long as they don't sell those new shares that they have, that's great. But it is causing more share dilution. But the share dilution is bringing Glow some cash. So is that bad? And that the warrants were already in their total diluted shares outstanding. So is it really share dilution? I don't know. All I know is it's brought the price back to 5 cents. And this company, I think one of the bigger concerns is actually in their earnings. And I know not sure if Yahoo Financial will show it, but this company actually recently had no growth, which was the concerning part here, right? So this was a company that had growth right up to here, and then the growth stopped. So more important than their warrants or what's happening with their warrants, I really need to see Glow Life Tech return to being a growth stock here, right? And hopefully this was just a little blip. They are expanding to Saskatchewan, some other places in Canada. So hopefully we get back to growth. But I mean, I think most investors were expecting kind of 40% sequential growth, and we got like negative growth here. So that's not good. Can they return to growth? That's really the only thing I'm looking at here with Glow Life Tech. So it makes me think of Liberty Stream. This may not be your type of company, but did you watch their presentation? Do you have any thoughts on this company? Yes, I'm not going for Liberty Stream. I know people love it. Same with Alula. People love Alula. Composites and Liberty. Everybody's talking about it. Look, I kind of go for more kind of undiscovered companies with good earnings that are undervalued. It's just not my type of company. Liberty Stream is the talk of the town. It's everybody is talking about Liberty Stream. It's one of those stocks and companies that, you know, again, for me, trade it if you want to trade it. But right now, for me, I have trouble owning it. Basically, no revenue, a large market cap. It's already up significantly. So not for this guy. I'm taking it easy, no big moves until something obvious turns up. Absolutely. Roof has done nothing, and that's why I don't like pre-revenue stocks on my channel, right? So let's go look at this here. So what is it? Liberty, I think it's just LibV, right? There it is. So this is Liberty that we were talking about. 1 year, look at that, right? Am I super excited? Does that look like something? This was 15, 16 cents down here, lower, 16.5 cents. All of a sudden, everybody's talking about it. It's basically famous. It's internet famous, up to about 45 cents. For Liberty Stream Technologies, we go to the statistics here. They got anything? Oh, yeah, nothing here. So they're up to, you know, $45 million market cap, $41 million here. No earnings, no PDE, no forward PDE, right? EV to adjusted EBITDA is negative 12, and they're 8 times book, and they have no sales. So how am I supposed to hold them accountable? How am I supposed to look at their earnings and know whether or not they're doing a good job or a bad job? Like, these are the types of gambling stocks for me, right? You're gambling. They have a product or service that you like. You think it can turn into $1 billion company, but you don't know. There's no product market fit yet. And so you're just gambling on it. Not my type of company, but smarter investors than me absolutely love it. One good example here is and people made fun of me for this on this, because I don't do pre-revenue companies. And this is one of the only pre-revenue companies that I've covered in the past 12 months. And the only reason is because it was going to be revenue producing, or it was supposed to be revenue producing in August. Well, here we are. It is now, but they haven't produced any earnings with revenue yet. Right? So they have their pilot plant. It's being commissioned up to about 50%, I think, right now as we speak. And I think by about 2026, they're finally going to get up to 100%. So by about 2026, this will be a revenue producing company with some numbers that we could look at. But you look at the weight. year to date now, right? Yeah, they're up 44%, but that was again back from 2024. If you look year to date 2025 on roof, it's done absolutely nothing. And that's because we're waiting for revenue that might come in 2026, but we've been struggling with. So that's the hard part of some of these stocks. You look at this one here, same market cap as Liberty, $49 million, price to sales of 67, no earnings, EV to EBITDA is negative. There's really no way for me to hold these companies accountable except for damn well produce revenue soon. And so we have some numbers to look at. That's where I'm at. That's where I'm at with Roof. That's where I'm at with all these companies, right? So not a fan of pre-revenue. I'm pretty adamant about that. Here's the thing is that retail investors, like your average retail investor that has, a family and some chores and responsibilities and kids to look after, like your time is really limited. And when you have a company report earnings, you could take an hour of your life, 1 to 2 hours of your life to really look at earnings, dig into earnings, and earnings will show you revenue growth, expense growth, profit growth if they have it. They can give you all these hard numbers to make a decision. And within those 1 to 2 hours, as an average retail investor, you can make a decision. One of the problems with these pre-revenue companies is that if you truly are doing your due diligence, and I mean, not just guessing, like, I did 15 minutes of research on this product. I like the product, so I'm going to throw a bunch of money at the company. If you're truly doing research on a pre-revenue company, it takes days. It takes weeks. I've seen guys, rent helicopters and go fly out to some of these pre-revenue companies to just do actual due diligence and research on them, right? Your average retail investor does not have the time or the resources to do enough due diligence on these pre-revenue companies. They're more like gambling, right? Small amounts of fun money and hope they go to $1 trillion. But for me personally, for your average retail investor, at least for me anyway, I think it's easier to get those every 3 months. You get earnings, 1 to 2 hours, make a decision. That's the place to be, at least in my opinion, right? So no pre-revenue companies for me, but I covered enough good companies, I think, that aren't pre-revenue. And yeah, I'll see you back here next week, next Monday. Hopefully we have some earnings to talk about. I am done for the day. Good luck out there. I hope you're making money in microcap stocks. Thank you for your time. Thanks for showing up. Thanks for watching. Always appreciate it. And we'll see you again next Monday.